we're going to majorly focus on. Hello guys, Steven Duck here. So today we're going to talk about KODK and all of the sympathy plays that happened last week. Overall, I think I made about 500,000 between Wednesday and Thursday and Friday. Didn't really make too many trades before that. We're going to be majorly focused on the fundamental side and the technical side. Fundamental side, I'm going to cover the basics and how you should choose what type of market cap zones you should trade and how it's going to affect compared to 2016 and 2017 market due to the current market condition. Before I start this video, make sure to click the like button and subscribe. It's going to help to support our YouTube channels because I'm giving content for free. If you haven't, make sure you do it, and let's get into the video. So the first point I want to cover will be the fundamental side. Now, generally we trade small caps that is considered anywhere between 10 million to 100 million market caps. Due to the market condition we currently have, the small cap can be traded over $2 billion on the day. And back in 2016, 2017, we're trading around 300 million to 400 million maximum on that day. So you can see the total dollar that's being traded on one day increased about 3 to 5 times. And that, you have to take that into considerations. Generally, we're looking at gap up short, bounce short, overextend gap down as soon as the market open. Now, we're looking under 100 million market cap range. We'll have to increase that about 3 to 4 times. So now the comfort zones we trade is anywhere between 100 million to 500 million for me. And that will be my advice to give you on the fundamental side. Just make sure you choose the comfort range for overextended gap down and bounce short. Because of that maximum dollar traded increased, that creates more opportunities for us, especially we're increasing our comfort zones to 10 million to 500 million. Just by using that method, you can get much more opportunities and you can generate much more profit as well. That'll be my only advice to give for the fundamental side, and let's dive into the technical side. And there's a couple points I want to point out on the intraday charts for KODK and how the psychology was played out for the buyers and the short sellers. And also I'm going to attach the ticker that I made $350,000 on and giving my entry and exit. Make sure to pay attention to the entry and exit and how the psychology was played out. I think is very important for beginners to understand the chart overall. And let's dive into the chart. So for KODK, I'm going to talk about how it actually spiked from almost from $2, $3 starting to almost $60. Gained over 2,000%. So the first day when it gapped up, it was trading 50 million volume in the pre-market before the market even started. And when you see that type of actions, you do not want to actually place a trade as soon as the market opens. Now, for these type of crowded trades, they always tend to push after about 30 minutes after market open. It seems like an all-day fader, but for gap up short specifically, that when the stock trades that much volume, if the volume exceed over 100 million on one intraday, and that will slowly change the pattern. Now, for the maximum fading percentage, especially for massive gappers that tends to fade all day, KODK went from 12 to 7. Now the maximum fading percentage is supposed to be 50% of the entire gain. So the stock still have rooms to go down after it closes around 7. That's one of the main reasons people held it overnight, especially on the short positions. When the stock traded over 200 million volume on that same day, and they had a PR in the after hour, the stock reversed instantly and squeezed almost to the day high that was formed at 10 o'clock. Then during the after hours, stock broke out, held this support at 11 and gapped up, starting to squeeze at 13. Now as soon as the market opened, I think people were shorting because it created enough range. There were no consolidations whatsoever, only in the pre-market. As soon as the stock dipped, it starts to squeeze people from holding the short, probably around 9 or 10, and people who are shorting into this push, which is 21-ish. That massive squeeze and the stock went pretty much insane. When the stock is keep halting itself and it's jumping $5 basically as soon as it opens. Now, the most ridiculous part I saw, it was jump from $51 to $6. That's almost $10 a share. And when that type of action happens, short seller gets really nervous because you cannot risk almost 10% in one tick. That's just way too ridiculous to hold that type of positions on the parabolic. So soon as the parabolic ended, the stock went up to $45, which bounced relatively high because I generally don't really see that type of bounce from the massive panic, drop from $60 to $26. In the morning, you tested yesterday's high, which is $46 again, and it starts to form a massive consolidations. Now that's some type of action you want to see when you are preparing for shorting. And as soon as it starts to form a decent consolidations and it looks like it's about to break down in the afternoon, I shorted a little bit around 38, covered in the next day. I think it's anywhere between 23 to 24-ish. I'm not very confident holding that long because the overall range was created between 3 to 60. Now dropping 50% from the day high, which the maximum fading is around 30. If a maximum goal is to cover at 30 and you finish the really weak, which I know is going to gap down in the next day, since the market opened, people started to panic and sell their positions. That's where I cover all my shares. So generally I didn't really get a good cover, but position size still not that big. For what I noticed is when you are playing the major play, that brings all of the sympathy plays. Typically I don't really make money on the major play, especially on the way up. I would take about 1 or 2 paper cuts, then I'll make a big chunk after the stock finishes spiking. Then I will calculate all my gains and losses. I can only come out with a really small gain. So I have traded these type of major plays for a couple of years now. It happens pretty much 90% of the time. That's why my main focus is all the sympathy plays, because all these type of plays, they don't actually have a news. They just following these type of industries like pharmaceuticals, shipping companies, or Bitcoin happening in 2016. These type of companies, if they're spiking based on nothing, they will drop pretty much 90% of their entire gain after the hype is over. So I focused on EDSA, which happened on Thursday. It was a low float and I see a lot of people chasing. It gapped up huge and KODK was losing its momentum. So all of the sympathy plays, as soon as it opened, dropped miserably. EDSA dropped 50% in the first hour. By looking at the chart, you can see how profitable when you are focused on the sympathy play instead of KODK. KODK consolidated, faded really slow, and also traded way too much volume, super hard to read. The more volume is trading on the stock, the more competition it's going to create. That makes the stock much harder to trade compared to normal. Focus on the sympathy play rather than the meme play is a much profitable choice, especially during this type of hype. So my entry on ESDA is 19. I covered half at 12. Then pretty much the rest of my shares are covered around 10. And also EDSA is probably my highest profit of the month. So that will be the end of the video. Make sure you can implement my strategies to your own strategy and probably make it to your own. Trading is all about yourself. You don't have to focus on other people's profit, but learning about method is very important and how to really take other people's good strategy and potentially form into a much better strategy by adding your thoughts into it. If you have any questions, please leave a comment below and I will see you guys in the next video.